Hi, this is Steve Miley, the market chartist on behalf of ForexTraders.com, and we're now going to take a look at both the ICE Brent Crude Future contract in here on the June contract, and also the US dollar versus the Canadian dollar spot FX rate. With the strong oil price in here, this strong rebound we saw last Monday, leaving upside pressures for the ICE Brent Crude Future, and in turn US dollar Canadian dollar still pointing lower. So starting off on this chart in here, we had this significant dip low after the breakdown of the Doha talks without success for a output freeze. The quick turnaround though we saw last Monday for this strong rebound hammer pattern back on the 17th of April allowed for upside pressures, a new recovery high last week, leaving bullish pressures up through this resistance of 45.02 and real threat for higher targets of 46.74, 48.19, and maybe back to a 50 handle, back up to $50 for ICE Brent Crude Future, up to this 50.40 target, maybe through late April, going further into May. So upside pressures from this whole bull theme very much intact for oil in here. That in turn leaves dollar CAD pressures lower. So this whole sell-off from mid-January reinforced more recently by the break of this trend line support that comes all the way back from the middle of 2014. That leaves an underlying bearish tone in here. The market having surrendered 128.28 and 126.56 chart supports as well. Downside pressures now for lower targets of 123.04, 121.27, and potentially to the psychological and option target down at 120.00 as we move through late April, then further into May. So dollar CAD still aiming lower as oil continues its bullish threat into late April, into May. This has been Steve Mai, the market chartist, on behalf of ForexTraders.com, and I wish you a great trading week.